to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, AJ Brown. Good morning, sir.
Hi, Sip. Hi,
a beautiful
everybody.
Summer morning, right? We're watching the intro. You got your summer gear. We're in summer season, January 24th.
Yeah.
Feels like the market's been in a good mood the last couple of days. We're rallying, and
It might even be June 24th.
What did I say?
January.
Oh, wow.
6 months off. Yeah, it is summer. It's a little bit gray where I am, but that's okay. Otherwise, it would be hot and humid and disgusting. That's what the least coast is all about. I'd rather be at the best coast, but here I am.
Hey, it is what it is. But the markets are green, and we shot up rather hastily this morning, kind of filling that gap. And I feel like we talked about that last week when we did some of the S&P analysis. You were like, hey, we might get a run up, and it's happening.
Yeah, exactly as we talked about last week. I got my chart up on the screen. And so what you're going to be noticing here is we popped up. So our bottom was June 16th. So you can jot that down in your notes that we hit our bottom on June 16th. And I changed the color of this trend to green because it has confirmed. And so now we're totally looking for this new top. Now, this is, for all intents and purposes, this is called a range contraction phase that we're on. We're expecting range contraction, and that's healthy for any sort of trend. This is a downtrend we're in. We don't want to be buying long. We don't want to be jumping on the bandwagon and thinking that this is actually a bottom of the market. We expect it to reverse by about 3,980 or lower. So you could put that in your notes if you're watching the S&P 500. We expect this to turn back down by 3,980, maybe 4,000 at the most, right? So that's the threshold we're watching. Unless something happens and it pops above that threshold, we're expecting it to go to 4,000 and then head down south again.
And so that's what some of your strategies are kind of setting up to do the same play. I know last week we talked about 3 tech stocks that all had very similar setups. But maybe before we go down that road, let's talk about the interest rate stuff, right? Because it's driving the market, and you made a good point, and that's the rates are going up, but they're continuing to, what is that, buy the bonds back?
Yeah. So interestingly enough, Jerome Powell, he's running the Fed Bank right now. He did some testifying in front of the public and in front of the Congress about his policies, and he stuck to his playbook, talking about inflation needed to be controlled, so they're going to be taking aggressive stances. But man, behind the scenes, yes, they raised the borrowing rate, which is more public, right? But behind the scenes, we know that they also do this buying and selling. And so if I take a look over here, this is what they released yesterday. Now, they're always a week behind. So yesterday when they released their Fed balance sheet, that was for the prior week. So we don't know what they've done in the last 7 days. But you'll notice that this shows that they're buying bonds. What does that mean? It means that they're creating money and buying things with that magic money. And so that's counterintuitive to them increasing the borrowing rate, because this is basically offsetting the effects of that. We would expect, because of what they had been saying, that they would continue to sell. Every time they sell their bonds, the money that they get from selling those bonds, they go ahead and shred, right? So when they want to buy bonds, they create the money magically. And then when they sell the bonds, they shred that money, which takes it out of circulation. So they're actually injecting money back in over the last couple of weeks, especially this last reporting. They injected about $15 billion back into the market. So I wonder if they're trying to do a strategy where they raise interest rates, and if it gets a little bit too much of a tepid response or too much of a aggressive response, they blunt that by throwing some money into the markets, just enough to kind of cool things off. I'm always looking behind the scenes at what's going on, but sure enough, sentiment is turned a little bit bullish, which again, we forecasted. Looking at the technicals, we knew there had to be a pause in the selling. And so this pause is actually setting us up for the next shorting phase. I don't want anybody to go long, not right now. We're not sure that this is a bottom. In fact, I'm pretty sure it's not. Instead, we want to be really patient. And when this tops out, and we're watching the S&P at around 3,980 to 4,000, when this tops out, that's going to be our opportunity to, either short or buy some put options.
And then if we're looking ahead, what month are we taking a gander at for options, do you think?
Well, it looks like it's going to be in July. It looks like in July we're going to be thinking about the timing of this, and if the options, if we're going to be going directional, this shorting, we probably want to go 3 to 6 months out. So we probably are thinking somewhere around the November, December, January timeframe for the expiration date on those put options.
All right, and then the other thing I was thinking is, okay, so we're kind of filling the gap here. What on the economic calendar should we be keeping an eye on that may, either stall that or keep it moving? And I'm gonna just guess it's inflation related.
Yeah. Well, interestingly, so this week was all about housing, right? And so there's inflation across the board. There's inflation in people's in jobs and in salaries. There's inflation in retail products all the way through the supply chain. So the producers price index says that there's inflation where the suppliers are selling to the wholesalers and the wholesalers are selling to the retailers. There's inflation in that stack. There's also inflation from the retail to the consumer. That's the one that's really affecting us at the supermarkets, especially for food and gas. But then there's also been inflation, a big bubble in the home sales. Now, existing home sales was reported on Tuesday, and I checked that out, and it came in below expectations, which is good, right? Because that means that the tactics that the Fed is taking is kind of cooling that down. But just this morning, new home sales were released, and new home sales was way more than expected. Now, I talked about this the other week. A lot of times when we know that money's going to get expensive, mortgage rates are going to go up, things are going to be more expensive tomorrow than today, there's a last minute kind of push, right? People are like, I better buy that home now before it gets more expensive. And so I totally forecast that the reason why we saw new home sales pop instead of drop was because of that bubble. And so I think what the Fed's going to do is watch this over the next months. And I would imagine that this was the last ditch push to get the cheapest price we can. And then we're going to see new home sales taper off, just like we saw existing home sales taper off.
Because it's lagging a little bit, right? Like that data is like the majority of the weeks before they actually raise the rate.
Yeah. Or they're raising the rate and people know that more rate hikes are coming, and so they're like, shit, I was going to wait till the end of the summer to buy that home. I think I'm going to buy it right now.
So what are we looking at next week?
Well, probably more inflation numbers, right? I mean, that's what's judging the whole market. So I would imagine that we've got some other retail sales numbers coming. We've got a whole ton of stuff. But it's all about, are we controlling inflation? That's what everybody's eyes are on. Besides some of the social topics that are out there, eyes are on this. Another thing that we should talk about is a lot of companies are getting taken private. I just saw that Zendesk is a company that makes software that's actually quite popular for support centers. So when you go and you type in a question to one of your favorite retailers about one of their products, like, "Hey, I'm missing a nut in one of my toys that I bought for my kid or something." You're probably using Zendesk, right? It's a way for merchants and stuff to keep track of the questions coming in. Well, Zendesk was a public company and they just got taken private. What that means is that some firm comes in and buys all the shares of stock. And the reason why the most popular one that happened in our past was Chrysler. You guys, you might remember when all the companies were taking a hit back in 2008, 2009, 2010, and there was a lot of government stimulus. I remember specifically that like Ford wouldn't take the money, and that was questionable. Maybe for status, that's a good thing, but it was nice that GM took all that money. But Chrysler went private. And the reason why companies go private is so that they can make big changes, right? When a company is being traded on the stock market, it's not easy for a company to make drastic changes because now you've got everybody's interests in mind and they all have kind of a vote with their stock purchase. But when you go private, man, you can do all sorts of restructuring. So I'm wondering, Zendesk is just the latest example. There's been a lot of companies going private. And I wonder if this is kind of a restructuring to kind of meet the way that workers and other like AI and stuff wants to work these days, right? Nobody wants to go back to the office. It's very interesting. So I want people to keep an eye on that trend as well.
All right. We'll keep an eye on the private takeovers, if you want to call them that. All right. So moving on in this part of the show, what we're going to do is run through a couple of tickers that members this week have brought up or AJ has identified. But before we do that, just want to invite everybody to check out AJ's webinar. He does a daily webinar where he breaks down his strategies. He goes over examples just like we're going to do here, but a little bit more in depth so you understand. And so we're going to go ahead and add the link in the chat. So if anybody wants to check that out, go ahead and head on over. We'll take a little break and we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ.
I got to say, because we were on our call yesterday with our program participants, the one who, that workshop that I do every day is a lead in to, if you're interested in working with us in our workshop. So our workshop is every Thursday, and people don't understand, we like to plan out these trades. And then once we plan them out, we follow them. A lot of folks don't get it that I actually have this cool tool that we use in our program where we just we look up some different values, fill in the blanks, and the tool actually generates for us our trade plan. It really simplifies this premium selling down to where the trade plan basically says, when you see this, sell this number of options. When you see this, buy this number of options. And it turns it into this like black and white rules-based trading plan. People should check it out.
Yep. And we added the link in the chat. So if you want to go ahead and sign up, watch it now, watch it later, schedule it. All the information will be there. And so when we do these episodes, we do appreciate the insight from the audience. And so anytime someone leaves a comment on one of our videos, we're going to do our best to run through what we can. And so AJ, would you mind pulling up MT Archer Mattel? I believe this is one of our comments from our YouTube channel. What is your analysis?
So we like this one because it is basically a sideways channeler. Now, it did have a little gap down, which is not a problem for us. But you'll notice that this is a sideways channeler. One of the things that kind of thwarts a lot of people is that this particular candidate, because it's got folks who invest in it that are not here locally in our time zones, you see a lot of gapping in between where the stock price closes and where the stock price opens the next day. And that could be something that gives people a lot of heartache because the options market doesn't have this after hours or pre-session trading like the stock market. So options are called derivatives. That means that their price is somewhat related to the stock. So what we see happen in the first few seconds of the market opening is that our option prices adjust almost like incredibly quickly in the first like minute or so that the market's open, and that could catch people off guard. It can cause stop loss orders to trigger and stuff. So people get a little bit worried. But what's nice about this particular candidate is, for the most part, it stays in its channel. Now, we can see that just in the last 3 days, it gapped down. And so this is an interesting kind of topic because when you have a protective option in place, it behaves differently than a stop loss order. Both of these can define what we call a trade zone, right? The trade zone is where you set up the price range or other variables, but usually it's a price range that you want your position to operate in, right? And so if it goes outside of that trade zone, you want something to happen. In the case of a stop loss order, it's going to cash you out, right? And that's how it stops any sort of loss or anything like that. But when you have a protective option, it behaves differently. Instead of like kicking you out of the trade, it leaves you in the trade, but it has this other position that is going to gain by the same amount that your previous position was dropping. And so that basically stops the risk right there, because this other position is going to gain dollar for dollar when this one ends. And that's kind of nice because you get to hold on to that stock position if you want to, or you could actually manually come in and get rid of that stock position and allow this protective option position to continue to gain. Gives you a lot of flexibility. And so if you had your protective option in place when this candidate gapped down, you're actually in a cool position, right? Because you can now manage your trade through its life cycle without actually having to adjust anything. All you're going to do is next time you select strike prices, you're going to select it in its new zone. And that's how you can keep these positions going on for a while. So I like this particular candidate. This looks like an opportunity for us. If you didn't get a chance to sell the premium and buy the protection here, let's sell the premium and buy the protection here. You're going to get more money for your premium, especially if you decide to sell an in the money premium, and you're going to pay even less for your protection. So don't fret about this kind of move. Just manage the position as you go along. It makes it really easy with options.
All right, cool. Moving on to the next ticker, and this is one that we've talked about, I think, a few times on the show,
Yeah.
and that's Ruth Steakhouse. And you're seeing another setup? I mean, it sounds like you just keep getting in and out and in and out.
Oh, yeah. Ever since we featured this, what was it, like 6 months ago, I've been trading this on and off. And so what I wanted to, this is one of my nice ones. A lot of folks were following us and they went ahead and shorted some Ruth Steakhouse stock shares at $19. And now this is the time we got our signal. This is the time to be selling that premium. Let's take a look at what we could get for selling some premium. So, when we see a pattern like this, we want to identify what are the boundaries of this sideways channel? In other words, what's support and resistance? And I want to clarify and I want to emphasize that I'm using the word identify, because you can't define support and resistance. The pattern defines it. We just have to be kind of like a detective and determine what it is. Like for here, I've got it identified at 16.5 and $19 respectively, right? But then when we set up our trade, we get to define where we put those boundaries. I hope that makes sense for folks, because we can define, using a boundary outside of the channel zone. What that means, of course, is that it's going to be moving in the channel zone. We're never going to get outside of our trade zone. And so this position is going to provide income for us, right? Or we can make the decision to instead tighten up that trade zone inside the channel zone and fully take on the possibility that we would get knocked out of the position. If we venture out of the trade zone, it means that either our protective option or our sold option is going to kick in, but you're guaranteeing higher profits up front. So you get to choose, after you've defined the pattern, defined and identified where that pattern is, you can choose whether you want to take profits up front or if you want a position that's more for the long term. So right now, we get a chance to define what our trade zone is going to be. I almost am recommending, because I know that this particular symbol trades on $2.50 strikes. So $17.50, $15, $20. I almost feel like we should define our trade zone between the $17.50 and $20 zone. So what does that mean? It means coming over to our option chain, and we'll use a July 15 option. We're going to basically sell our put. And so we'll sell our put. Looks like we could get about $1.15 if we sold it right this minute. And then maybe not August. Maybe for my protective option, I'll go all the way out to November. And this is where I'm going to be buying my $20 option. It's going for about $1.65. So yeah, I'm going to be putting up an additional 50 cents. But I know that by buying this $1.65 option, that before I know it, this $1.65 option is going to be worth more like $3.50 or $5.70. And that's what I'm going to be doing. I'm going to be rolling out my protective option as I move towards the top of this channel. So that's what I would do. I would be buying the $20 call, probably out in the November expiration, and I'd be shorting or selling or writing. Those are all synonyms for each other in this instance, the $17.50 put. And that's exactly what I would be doing right now. This is when we define this trade zone, and this is where I'd go.
And let me ask you a question. So because of the spread, right, you're collecting the premium, but you're also paying, am I safe to assume that my investment is that 50 cents, which would be the equivalent of like $500?
Well, so yes. So the cool thing is the this thing that you're buying for 50 cents is actually worth right now something like $1.15. Let's make sure I got those numbers right. If I come back over here, you're getting a discount by it's worth $1.65. I said $1.15. What I meant to say was $1.65. So you're only paying 50 cents for something that's worth $1.65, because all that extra money, the $1.15, is going to wind up decaying with time, and so you're going to get to keep that money. So the put that you're buying at a deep discount, or not the put, the protective call that you're buying at this deep discount is only going to go up from here. In fact, we target that by the time we get rid of that protective option, when we don't need it anymore, it's going to be worth about $3.50. So if you bought it for $1.65, selling it at $3.50 is awesome. But if you buy it at 50 cents because you get that discount and you sell it for $3.50, I mean, you're talking about not only making 100% on your money or 200 or 300, you're making like 450% or 500% on your money by buying this for 50 cents and selling it for 350. That's our target.
Yeah, and that's in what, like August, late July, that could come to fruition.
No, I'm talking about probably next week.
Oh, okay. All
Yeah,
right.
see, look how fast this stock tends to move up. So if we did this transaction today, it looks like it takes 1, 2, 3, 4, 5 days maybe. I'm thinking in the next 5 days, we'll be able to liquidate this 50-cent option that we bought. And yes, the price says $1.65, but because we got that discount for selling the put down here at $17.50, we'll get it for 50 cents. I foresee us being able to roll it out for $3.50.
Beautiful. And this is one that you've had on the watch list for quite some time. So it seems to be sticking to the way that it likes to move.
Yeah, Ruth has been paying us nicely over the last month. So I can't emphasize how fun this one has been to trade, but also how profitable it has.
It's like you're making so much money with Ruth. You should probably go celebrate by having a steak there.
But the scoop is people get confused between the initial trade and trade management, basically nursing the trade through its life cycle. Once you've got that initial position on, it's just a matter of selling premium and deciding each time you sell the premium what that trade zone is going to be. There's not real rocket science to it. It's just something that you learn through experience. And that's what we like to do in our workshops is basically guided discovery. Just do it on paper first, feel like you're getting it comfortable doing it on the simulator, and then start throwing real money at it.
And stick to your strategy and come on the show and get tips from people that have been doing it for quite some time.
That's right.
All right, moving on. Let's run through some of these. Well, before we do that, there's a question that just came in. I think it's worth visiting. Let's see. Hey AJ, does the 6% protocol approach apply to highly liquid index ETFs?
Oh,
SPY,
absolutely.
Q, or does it only apply to tickers for individual companies?
No. Anything that's optionable. So ETFs, we actually just on Tuesday. So as part of my program, in addition to the workshops we run every week where we actually sit down and do some planning on trades and send out the plans to everybody, once a month I do a lecture series. And we just had our lecture series this Tuesday evening past. And we talked about doing option strategies on the VIX options. And so, yeah, I mean, any of these SPYs, diamonds, Qs, even the smaller ETFs that are more specific, like the transportation ETFs or ETFs around tech stocks, specific tech stocks like the FANG stocks and things like that. I'm telling you, you can do this on anything that's optionable. So if it's moving sideways, so we want to sell premium on it now.
Awesome. Cool. Well, let's run through some more tickers that we've got questions on. Tommy from Hong Kong
That's cool.
wants to see your input on NIO, NIO.
Yeah, okay. So NIO's an interesting one. I've actually been watching NIO because one of my clients is big into NIO. So NIO, Alibaba, these are all Chinese companies that, man, the market went sour upon for a while there just because of kind of worries about how China is treating those companies, right? China is not the freest or capitalistic of societies. So some of these companies like Alibaba and NIO, for instance, got kind of the backlash of just being based in China. With that said, it seems like a bottom has been found, but let me zoom out a little bit because I have been watching NIO from this top that formed back around beginning of November of 2021, so last year. And that's when we started going on this downtrend. And so I'm not convinced that we have a bottom being found until I get above this level of around $27, popping us out of this channel. You can see here we've tried to do that in the past, and it just hasn't gotten through that level of resistance. So I wouldn't be completely going long on NEO right now. In other words, I wouldn't be buying NEO or buying NEO call options. But you can't refute, when we look back more closer to our nose, you can't refute that we've got an ideal trend forming here. I mean, we moved at this bottom back on May 11th. This bottom closed at about $12.71. And since then, we've been having this ideal pattern moving up. I mean, this is what we would consider an ideal, if not mature, mini trend forming that I just drew this best fit trend line on. And so that would be interesting to watch as well. The other thing that's interesting to watch for us premium sellers is that if we look over here and I draw another one of these lines, let's see if I can get it to stick. I mean, for the most part, NEO has started to move sideways. So I'm thinking that NEO should be one that we sell premium on. So here's my strategy. After all of that, as my wife would say, you got a lot of word salad coming out. I'm waiting to see a top, a reversal, probably around this $24 mark. I'm expecting it any day now. And if I get a verified top and I start selling off, I'm thinking that this is an opportunity for me to double down on my put options. Buy some of those put options, and then the next time that we see a bottom form like we are on Ruth, that's going to be my opportunity to sell some put premium and buy some protective calls. Basically create that spread that then creates this trade zone that's going to build us income. And I'm just going to keep doing that. And I can continue to do that as each one of these expires. Basically, the premium expires and I roll the call out to the next one. As each one expires, I can adjust that. So if Ruth does continue to go up, I can just move my trade zone up with it. And if Ruth does go ahead and breach this, which I don't think it will, but if it does breach that, we could completely convert our trade or adjust our trade to take advantage of that move up. And if it doesn't, if it continues to move sideways, or even if it takes a dip, this would be an easily adjustable position. But I'm not ready to go long on NEO, not yet. I'd have to see it get above $27. I'm ready to double down on going short NEO.
Awesome. And it's at a very favorable price point, which I always like to bring up because
Absolutely.
that little $20 area is optimal for a lot of these strategies.
And you can see another thing we look at look at the liquidity on this. I mean, we're talking about 12,000 contracts, 11,000 on the put side, 11,000, almost 900 on the put side. But the other thing you might want to notice is the spacing. I'm just looking at these different option chains, the spacing between the strike prices. So this has more traditional spacing every $2.50. And so you just want to know, because when you're setting up these trade zones, the strike prices define everything. So $20, $22.50, $25, $27.50. Down here on this side, you'd be talking about $17.50, $15. So these are the marks where you can set up your trade zones, because you'll be doing it between strike prices. I think that this is totally doable.
Yeah, good pickup, Tommy. Moving on, we love to hear members and people watching the show taking on some of the suggested signals. And so David from Flagstaff, Arizona, I guess jumped into our TJX recommendation, and now he wants to know what's next.
Yeah, so what I got from David was that he actually went ahead and bought some put options about 3 weeks ago. I think that's when we featured TJX. So he went ahead and bought some put options, which is great. He said he bought them pretty far out in time. That's great. And he said that just a couple of days ago, he went ahead and set up his trade zone. And he said, "What next?" And so the cool thing is you just let this thing work. You let the time go by and it's going to make you money. So here's what you're going to do next. This is part of that trade management, which seems to be the theme of today's story. You're going to let time go by. I guess you sold the July 15th premium. So let time go by. As you let time go by, that premium you sold, all that money you captured up front, you're not going to have to pay that money back to get out of the trade. It's going down exponentially to the point where it will expire worthless. So we like that. At the same time, your protective option that's doing what it's supposed to do, it's providing you protection, it's actually increasing in value as well. And so all you're going to do is you're going to watch for when TJ Maxx tops out. And when it tops out and it confirms that it's topped out, let's not shoot our gun until we see the whites of their eyes. But once it tops out, you're not going to need that protective option anymore. Get ready to sell it back at a huge profit. Just like we were talking about at Ruth Steakhouse, investing after you take the discount from selling the premium away, 50 cents to get 350. Whatever you paid for this protective option, minus the premium you got, which is kind of a discount to that protective option, that protective option is going to be maybe 7 or 8-fold what you paid for it. So you're going to roll it out, and then you're just going to wait patiently to do it over and over again. Just all you have to do right now at this moment is wait.
All right, David in Arizona, go enjoy some air conditioning because because I'm assuming it's pretty hot out there these days.
Yeah.
But appreciate the question and the insight, David.
Yeah.
Moving on. This is one that I've been hearing a lot in the news this week, and I don't really know what the chatter is, but maybe we'll figure it out here. June in Trenton, New Jersey is interested in Roblox RBLX.
June. That's a cool name.
June. June.
All right. So Roblox, I don't know this company either. So we go to our favorite Finviz site. Finviz has a summary of, you don't even need a membership to Finviz, or you can get a free membership. Is nice. You can see I've been with my free membership. You get a lot of pretty. So Roblox, I pulled up the ticker. May 10th was the last time they had earnings. So June 10th, July earnings to be released. They market, so they do it in the evening. See a couple of people in the analyst world downgrading it a little bit, which is, I guess, I wanted to know what this company does. Roblox Studios looks like they make kind of the backbone, some software for the meta experience, right? 3D experiences. They have a software called the Roblox client that allows users to explore the 3D digital world for learning experiences or for gaming. So it's kind of neat, and they're based, it looks like they're all over the world. They have customers in the United States. It looks like as Cisco was the backbone for kind of the internet revolution by getting internet to everybody, routers, this company is positioning itself as kind of the backbone for people being able to explore the 3D universe through, headsets and stuff like that, or S's, which I heard is coming out at some point soon. But you always hear something about glasses. But anyway,
I think I found the pop. I think the big news was they added 50 million users, which is like up 17%. So they're seeing growth in that respect.
They are, but at the same time, what's interesting or interesting slash interesting that red flag, right? Not only the analysts downgrading it, but I'm also seeing a lot of the insiders are selling large number of shares. So either doing really good, and some of those insiders are like, man, I wanted some profits here, or maybe thing going on. But let's look at the chart. The chart shows that they've been selling off until just recently, where like they found a floor at about $24. If I go back in time, I mean, $24 is quite the floor when they dropped out at $140. So this company really took a little bit of a bite since the beginning of this year, end of year, to where they are now. And they do have a couple of support and a couple of tests of resistance right here. Let me zoom in again now that I've got a bigger picture. But I feel like I don't want to call this a bottom. So in selling premium, I have to set up an initial covering position. And that initial covering position allows us to see them into the future. And that covering position could either be going long or going short. And that covering position is going to adjust the trade in the future. So I'd like to do some pre-planning on that covering position as to whether I decide I want to cover it when it's going long or short. And I feel like, and I've been saying this for a while, nothing is hinting at me right now that I want to go long on anything. So here are thoughts on RBLX. My thoughts on RBLX is it currently is going up. It's been going up for the last week. I want this thing top. I want to get some kind of confirmation that it's top. I can use something like the fast MACD indicator that we about before. I'm also dreaming up a faster way of observing tops and talking with our program participants about it last night. That was just a little palette, folks. That might be something coming out in one of our future shows. But for the fast MACD, I'm waiting for a crossing, and that will tell me that I feel comfortable about buying some put options against this RBLX. I guess we better check to see how good the option chain is for trading. It's pretty healthy. Let's go out to like the January 2023. Yeah, oh yeah. So I would be thinking that I want a January 2023, or even if I feel like I'm play January 2024, there's lots of liquidity there too. Buy these put options so that if I had the last minute, I could adjust this position down. So I'd buy those put options. I'd wait for that opportunity to sell premium, set up that trade zone, make that incremental profit each month.
Beautiful. Yeah, and this is I would assume that some of this has to do with the crypto sell-off, just because they are in the metaverse, which is kind of crypto related. Maybe not. We'll see. But appreciate the question, June.
Let me go back to really quick something that David asked. He's like, what do I do now? And that just kind of emphasizes the beauty around premium selling, right? What do I do now after I've sold my protective option? Remember, this is not a difficult strategy. A lot of people are like, oh, it's so complicated. But when you actually do it, you're doing like one transaction, 2 transactions a month to manage these positions. You're not doing anything complicated. So, people sometimes fidget, especially when they're involved in the stock market. They want to watch it every day and all this. But once you set up that trade zone, it's kind of like you wait until next month to do something. It's just like an investment that you don't pay attention to, like one of those passive mutual funds or something like that. It becomes quite easy. So I know it's a little bit of a thought process adjustment to not be wanting to trade all the time when you're thinking stock market. But the beauty of this selling premium is that time is your friend. You allow time to pass by and you're going to make a fortune on these things.
As we showed in some of the examples. All right. I think that does it for all of our questions this week. Appreciate everybody sending those in. Uh-oh.
There's trouble in paradise.
The guard dog is on duty. All right. Well, like I was saying, I believe that, that covers a lot of the questions for the week. If anybody has any more, feel free to drop them in the chat. Feel free to message the team. We'll see if we can run through them, see if we can get you an answer. As always, the invitation to AJ's daily workshop, the link is in the chat. Feel free to jump in there and take a gander, ask some questions. Also, if you're enjoying the stream, hit that follow, hit that like, hit that subscribe button. AJ,
Smash
any
it.
final words? Any final words going into the weekend?
No, it looks pretty lax. I really feel like we're starting to lean into our summer doldrums, which for us premium seller means reliable income every month during the summer. So let's sell our premium for July if you haven't already. Let's look for our opportunities to sell that premium and let's just start raking it in.
And if you need to learn how to sell premium, like the lovely members at Trading Trainer, jump in that workshop, ask some questions, learn the strategy, do some test trades on a demo, and then put the work into action. And that's what we're all about at Trading Trainer, is seeing investors succeed.
Yeah,
all right,
I'm pretty stoked. I'm pretty stoked for David, who followed us on that TJX trade. I think he's going to be making some nice cash.
All right, wonderful. All right, with that, AJ, we're going to go ahead and call it a day. Enjoy the weekend. We appreciate everybody tuning in, and we'll catch everybody next week.
Yeah, let's roll the outro.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.